Let's start off with the shilling. Are you one of those people who believes we might be looking at 88 to 90 by the year end?
Yes, I am one of those people. Look at what's happening in the euro. The crisis seems to be deepening, and this plays actually in favor of the dollar. So we're going to see mostly asset relocation towards the dollar, which means the demand for the dollar is going to remain relatively high.
Can I just be devil's advocate for a second here and just say, why are you being so pessimistic? There's a likelihood that all those clever things you've said could happen, but there's also a likelihood that it could not happen, and we'll be just fine.
No. The euro is already happening.
Yes.
The euro crisis is already happening, and it's already taking toll on the euro. So and look at our market. Yeah, there's so much liquidity in the market. So we're gonna see more demand for imports. Guys are gonna go for more imports than exports. Companies are going to import more to, you know, machinery to upgrade, to take up all those stalled products. So, processes. So, yeah, there's going to be high demand for the dollar.
And that said, we're a net importer as a country. We don't nearly export as much as we import.
We are net
One
importers.
of which the biggest bills we have is fuel. Fine. In the last 2 days when we had the new fuel prices, they were down marginally. But what does this mean for the fuel price in the next 1 month?
We've seen ERC already reduce the fuel prices, the pump prices, though by really a slight margin.
Yes.
So yes, it's going to be it's going to positively impact the local pump prices, but still it's very volatile. Oil prices remain quite volatile given what's happening in the euro. In US, the fiscal cliff, yeah. So and then the Israel-Iran tension. So the oil prices will remain high and volatile.
You know, you just talked about the fiscal cliff, and I was thinking that's really not something for us to worry about. Alicia and David were talking about it at the top of the show, and all of us here sitting in a frontier market so far removed from the US should be worrying about the fiscal cliff.
Well, so far, the African markets have shown resilient in the past, but seemingly the ripple effects tend to affect us somehow. There's the remittances from the diaspora, the export markets, they all get affected if demand for goods in the other markets go down. So yes, it's something we should worry, though not such a great extent. Yeah.
Let's connect some dots here and talk about interest rates. The CBR is at 11%, and hopefully banks will start reducing their own lending rates in the next few weeks, perhaps. Where do you see us closing the year?
For well, the CBR normally the MPC do a bi-monthly review, so we're not going to have another chance
until the next
January.
year. Yes, but in terms of the
so
market
yes,
lending rates,
there's going to be pressure on banks to lower the interest rates, and you've seen the T-bills already coming down. The 91 went down by about 72 basis points in the last auction, and the government is sending a clear signal that interest rates are going to come down. They're already issuing a 20-year bond. That's a clear indicator they're expecting yields to really come down.
Let's talk equities. Yesterday we saw another rally for a third straight day. The NIC 20 share index still up 4,160. Please tell me we'll get to 4,200 just to vindicate me.
There's a good chance actually we might get there.
When?
When is now the question.
You don't want to predict here, do you not?
But yes, it looks really optimistic.
Right.
But then you look like the earnings season is fading away. We are moving more towards the election period. So guys are going to be more cautious going forward. Yeah. So it's really, I mean, the chance that I might get 42 is quite marginal.
Right.
But it's all good.
So what's driving market activity? Are we seeing a lot more foreigners? Is it local investors in the market these days?
Well, there's been quite an increase in local participation in the recent past, while the foreign dominated, doing about 50 or over percent for the entire market. So yes, the positive earnings by most companies, Safaricom, the banks, yeah, it's really. And then the interest rates are coming down, so there's more asset reallocation towards equities than from fixed income towards equities. And then the macro environment is generally improving, which favors actually equities.
In November, mid-November coming to December, local investors accounting for 76% of trades. Is that unusual, or this tends to happen?
It's not unusual. Well, most of the time locals actually do very marginal of the activity, but the sort of the investment trend in this market is where locals come in when the market is really high. Yeah, so they're chasing the bulls right now. That is something that's been happening over the periods. They hold, foreigners push it, and then when it's up there, then that's when locals get the confidence to get in. So it's not really unusual.
All right, the bulls make money, the bears make money, the pigs get slaughtered. I just needed to throw that in. Let's talk about Cooperative Bank. Fine, let's talk about Cooperative Bank. We saw the results out yesterday.
Yes.
Profits up by 1/3. What stood out for you, especially because of increased customer numbers for them?
Well, as much as the customer numbers, I mean, they've had this initiative where they're looking to drive the numbers, but then the loan book growth was quite not that big. But then you notice, like, as much as banks, the loan books are not growing that fast. The interest being carried on the current loans, being given on the current loans, are quite high. So this actually compensates them for any. For a slow loan book, the interests are adequate enough, the interest rates, to really boost their earnings.
And then let's compare that with Standard Chartered, which is the other bank that reported yesterday, profit before tax up 70% because of a growth in its loan portfolio, which you were just talking about.
Standard, yeah, that was really expected. They had this loan, I don't remember exactly to whom, but they had this big chunk of money lending to one particular guy.
Right.
Yeah, corporate guy. So yeah, that was really expected. And well, they've been going aggressive on the consumer, the general retail market, rather than their usual corporate segment. So yeah, that was expected of Standard. And
Standard has also recently given money to the government for the biometric voter registration kits.
Yeah.
So that's also probably coming into the mix.
Exactly.
So what does this generally tell us about the banking sector and the results we're seeing comparing the overall macroeconomic environment?
Well, the banking sector is generally expected to do good. As much as you see, like, they are still, the loans are still holding really high interest rates. Yeah, and then the interest expense is coming down.
Yes.
The interest rates are coming down. The interbank rate is at nearly 6%. Compared to the average lending rate of about 19. So yeah, it's going to be really positive on banks. We expect the sector could do about 30% growth if this trend actually is going to continue, at least in the last quarter. So yeah, it's going to be a really good year for banks.